Welcome, everyone. Thank you all for being here for our Breaking the Rent Cycle home buying webinar. We have three great panelists today with us. Kyle Turner, our VP of Operations at Madison Credit Union, Carlos Alvarado from the Alvarado Group, in Madison here, and Dustin Becker from American Mortgage. We're going to start off with Kyle. If anyone has any questions, I'll be monitoring the chat and can get you those. And everything will be recorded as well. We'll put it on our website and we'll be sharing it out. So yeah, welcome. And Kyle, if you want to get started.
Yeah, absolutely. Just gonna pull up that PowerPoint. Okay, perfect. So as Rebecca said, I am Kyle Turner. I am the VP of Operations here at Madison. And what I'm going to be talking about is how to get to the point where you are first ready for that home purchase, especially whenever you are currently renting, or even if you're currently in a starter home and looking for a bigger upgrade, this would all apply. So the first step, and this is something that my wife is a big advocate of. So for me personally, my wife already owned a home when we first started dating, and it was she bought it in 2019. It was a $60,000 really old house, 2-bedroom, about I think 700 square feet, so very small, the definition of a starter home. And but she was such a huge advocate for, she bought it when she was, I think, 24, and it was the process of, she was tired of paying rent and wanted to start the process. And the fact that she was already paying more in an apartment rent at that time. Now, that was 2019. Apartment and rent checks are a lot different than it used to be 7 years ago. But the fact of the matter is that with those high rents, that is your proof that you are already prepared for a mortgage. And more importantly, to what Dustin will speak to a little bit later, that a lender is happy to see that you've made that rent check consistently, that you have been able to work on your housing, but now you can, rather than paying somebody else's mortgage, start paying your own and building your own equity. So that is that first shift of making sure that you know that you can now work on your own home and building your own credit there. The first step to identifying what your budget might be is to look at your total debt to income. So what most lenders are going to be looking at is your total monthly debts. Now, that is the first easy step, is to pull a credit report. If you're currently one of our members, you can look at your credit report very easily in online banking by clicking on the credit report function, and Savvy Money pulls that. They can pull it as often as every day from TransUnion, but that's going to spit out what your minimum monthly payment is for each of your creditors. And you want to take that number and divide it by your gross monthly income. And when you have that percentage, that's going to be your starting point, because then you need to see, okay, if we look at a home price and looking at a mortgage, based on our current income, how much can you actually afford? When you're looking at lenders and rates, it's going to be best to make sure that your total monthly debts stay under 36%. So that's going to give you the best rates. It's going to give you the best qualifications and conditions. As you start to go above 36%, and again, Dustin is going to speak more to some of the programs, there's definitely options available. So just if you immediately are sitting there thinking, I already am at 45%, that is okay. There are options, but just know that as you're looking at your own financial picture right now in preparation for this, that's one of the biggest numbers that you're going to want to look at, is looking at those total monthly debts, looking at that gross and oftentimes verifiable income. So if you have a side hustle, that's good, but that may not apply in every financing case or every type of loan that Dustin or another lender may be able to find for your situation. But that's where you would want to look at maybe looking at your debts, looking at credit card debts, a car loan, refinancing into lower payments, things like that, or consolidating debts. Now, the next biggest step is, once you've got this idea of, okay, how much can I afford based on this debt to income? Now you want to estimate that future payment, because one of the best strategies that I've seen for starting that home purchase is not to just blankly save money and with this idea of I'm just going to try tucking money away and so that whenever I'm ready to buy, I'm ready to buy. But instead actually figure out how much you are going to pay. So you're going to estimate your mortgage payment in this ideal world of what your budget would be, and then you're going to start paying that to yourself. So taking what you would owe to the mortgage, what you'd owe for taxes, insurance, maintenance, and start to package that into a transfer. So see how much you're paying in rent. And then if some of these extra fees are more than what you're already paying in rent, because property taxes go up, insurance goes up, start saving that extra. Make sure that you can actually afford that new home purchase and pay it to yourself. Put it in a separate savings account. We can open up a side savings account here at Madison, or even into an account that you can't really touch as much, almost like a Christmas club account where you have the ability to put it away, and then if you need to take it out, there's a penalty. Otherwise, you get paid it out. And this does two great things. It lets you stress test that payment to make sure you can really afford it, but then also you build up a savings, which, as anybody who's bought a house knows, at closing, there's all sorts of different fees that pop up all of a sudden that you go, oh geez, I didn't realize that I had to prepay a whole first year of escrow, which is your property taxes, insurance. There's a lot of things that can come up at closing that you need to make sure you have the savings for. And this way of prepaying your mortgage basically allows you to prepare for that. So here are those pieces again: the principal and interest, taxes, insurance. Now, anytime we're looking at you being able to put less than 20% down, then we'd be looking at private mortgage insurance, which your lender is going to require, and they would cover that extra equity. That will go away once you can hit 20% equity, but a lot of times that can take a little while, and it's not money that you're building into equity. So that's another thing to consider. And then the maintenance. Ideally, you would be able to save 1% of that home value just because then it's tied to the actual cost of the home. But also starting out, that can be difficult. So even every little bit helps. So what does that actually look like? What does that actually mean whenever you're saving? So if you have a one-bedroom apartment in the Madison area, you're paying anywhere from $1,500 to $1,800 a month in rent. And let's say you want to look for that starter home in our area, which may be 300,000. Carlos could definitely speak more to that here in a little bit. But in all of the taxes, insurance, private mortgage insurance, if we're assuming you can put maybe 5% down, we'd be looking at extra savings of about $700 a month. That's what you would want to start setting aside into your own savings account. If you're in a 2-bedroom or if your rent is even higher, that cap can go down. But that's the easiest way of preparing yourself for buying a home and making sure that it's affordable, because the worst thing that you can do is go in and set a budget and not be paying that to yourself, and all of a sudden you're in a new house that you didn't realize, oh, there's a lot of extra things that I wasn't prepared for, like escrow or PMI or the maintenance, that all of a sudden you're in this house and you can't actually afford it because you've got other bills to pay. Your total monthly debts, the utilities doesn't show up on that. There's things that your cell phone plan that you need to pay to be able to exist in our society that is not accounted for in that debt to income. But this is a good fresh start number to start with, to say in this process, hey, this is what I need to shoot for. And then again, the savings there is that you're paying it to yourself. And if you can put it in a separate account that you don't touch, well, one, that will help your down payment, which can lower your that monthly payment even more. Especially if you can get it down to 20%, which there are programs that can also help you with that down payment assistance. And Dustin will speak more to that, both in the city of Madison, Dane County, and then other programs for our region that can be free money for your home, depending on the program that you're in and your qualifications. But you can quickly build that savings to help with that. With the initial costs, you never think about, oh, you may need to pay for movers or a moving truck and all this sort of stuff. It adds up at the time that you close on that new house. But the next initial steps for preparing for looking at a home is not necessarily to look at the market and see what you want to put an offer in. Set up that separate savings account, set up that shadow mortgage, and start an auto transfer just like it's your rent check right now, as if it's on top of your rent. Treat it like a real bill and not just a goal. If you do have any small balances on that credit report, like I said, when you log into online banking and you look at that credit report, if there is a car payment, then maybe instead of saving that extra amount, if you think it's attainable to pay off that car or to pay off that credit card balance that you're carrying, then instead of putting that extra shadow mortgage amount into a separate savings, maybe you apply it to one of those debts and get that score even lower, and get that debt to income percentage lower. And then also another key thing, and Dustin, I'm sure we'll speak more to this, but don't open new credit before starting this application. If you can avoid that new credit card, that new car loan, any sort of big purchases, definitely wait before making those decisions until you talk to Dustin or your lender, to make sure that everything will hit the places that you want to hit. Of course, debt consolidation is a part of that as well, and we can help with that part of the process. But that is really the first steps in this process. And also, I think one of the most skipped steps is a lot of people, I think, start with, oh, I need to get pre-approved and I need to get a realtor. But really, the first step is to sit down and see what you can actually afford. And of course, Carlos and Dustin would help you figure out what you can afford. But this is such an immediate process that sometimes it's good to pull your credit report, take a look at what you've got, and see where you can start. And then that makes the conversations with Carlos and Dustin even easier. If you're not sure exactly, if you want a little bit of help, we do have financial coaches here on staff. So I'm one, Rebecca is one, Scott is our third, and we have even more employees that are getting certified as coaches. That one of the services we offer for free for members and non-members is to take a look at that and start the process of what does a budget look like for purchasing a new home? Where do you fit in? What are your goals? And we can help you meet those. So that is the first step. And now that you've got your budget in order, I'm going to hand it back to Rebecca for the very for what comes next.
Yes, now that you know how much you can afford, now it is trying to find a house in our quite competitive Madison area market. And for that, we have Carlos Alvarado from the Alvarado Group, who has 20 years in real estate experience in the Madison area and is also a community activist, trying to eliminate these barriers to wealth and home ownership for those in need and and minority groups. And so we're very lucky to have him here to give his insight on that Madison market. So Carlos, if you want to take it over.
Thank you so much for inviting me. I have worked with a lot of first-time home buyers throughout those 20 years, and I really, I am, a person that really appreciates education and educating, all of our clients before they go into purchasing a home. I think is really crucial. So we always start with a home buying consultation. And that consultation, if you are a first-time home buyer, I will encourage you to consult with more than one person at a time and just see, where this person is going to better assist you. Do they have experience uh, with down payment programs? Do they know um, like who is the lender? Who are the lenders that are actually working with down payment programs so they can actually help you with what your needs are? Because you might qualify to those programs, but you might not. But then, if you just talking to a lender who has not done one, then is not going to be in your team. So you forming your team, right? So that's very, very crucial. So we put, it's like an hour, 15-minute consultation. We throughout that consultation, we basically will identify, what is it that you're looking for. We want to know what is it that you can afford after you meet with your financial advisor. And then we talk about the process. What is it that it will take, to buy a house? What areas you're looking for? What is it? Do you want a condo? You want a house? You want a duplex? Depending on your needs is and what is it that you can afford is that direction that we'll be heading. Um, but also, there is a buyer representation, right? So you need someone, a realtor who's will be representing you. Um, they normally the salary who covers that fee. But these days, you usually write in the offer like, okay, the seller will cover up to this percentage for your representation, but some realtors might not explain that well, where if the seller is not willing to pay, then are you able to pay? So how much are you able to pay? So just explaining all of that is super, super important. um, these days the market in Madison is pretty competitive. If you are in the entryway, anything up to, I would say, $400,000, you are still competing, with two, three, five offers. And you got to be super ready for that. Like the to for you to write a competitor offer, we need to know the whole picture about your situation. Like, do you have any savings that because people are writing offers these days with no inspections, for example, right? But if you are doing a down payment assistance program, then the city of Madison might require for you to do an inspection as well. Dustin will talk a little bit more about that as well. But I will, if you don't know, if you're a seasoned realtor, you might not understand all those points. So you need to understand that um, you might not do an inspection, but you still have like your own inspection. But then you have the city requesting an inspection. You might not be able to do that inspection, but it's still we can write a contract where you can leave one contingency out. We never recommend to leave that out, but when you're looking at a house, you are pointing everything that you can find potentially as a defect in the house, and then we share that information with our clients, and then they make that decision. There is a risk always where you're not doing that, but sometimes how realtors are presenting offers to the seller uh, is super important. Like, there are a lot of realtors who don't know how the programs work, so they present your offer potentially as a risky offer. So how can we educate realtors so they then presenting offers in a way that my client, in order for them to afford this house, they need this program. And a lot of those programs are already pre-approved, right? They already run some of the numbers, and it's not really that risky, but realtors who don't know are presenting it that way. So I, I think that is really, really important, just to know uh, you're working with someone with at least a few years of experience, just so they can better assist you with that. Like condos right now in the area, you can find something from like 150 to up to 600 or more than that. But also, like, there are some condo fees that you need to take under consideration, and that might bring the debt income ratio higher. So when you're talking to your clients, you're trying to figure out and have that team again with the lender, where you're constantly communicating with that lender and figuring it out, like, okay, these are the taxes, this is a condo fee. and then the insurance. So then just to figure out that you're not looking at places that you don't know if you can or cannot afford. Because then you get excited, you're, oh, I want to write an offer on this property, but then, you got to know your numbers all the time, right? So we can run those numbers and then we refer to the lender in charge just to make sure that those numbers are appropriate for that client. Inspections usually are between $500 and $600 and a house, including a radon testing, which if that house, if you're going to live in a house with the basement and people are going to be sleeping down there, you got to make sure that you do that radon test, just because that's critical for your health moving forward. But I have some of the numbers right here, so it's really, I don't know, for the average really prices in Madison now has changed so much that the medium right now is like 440, where it's really hard to buy a house, affordably. But still, you can find some homes in the Dane County area where, right now I'm representing some buyers who are in the 300,000. And yeah, we can see some, there's certain areas where are a little bit more affordable than others. Um, but it's super important to communicate that to like to our clients and be like, hey, what is it that you need, just so they know what is out there, so we can better serve, our clients. But ultimately, having building that team is going to be super critical so you can be successful when you're looking at a place, and also timing, right? Timing is also important. So normally from February to June, that's when you're going to find most of the competition. Like a lot of people are renting during that time. So if you can work at least, if your lease ends, let's say in August, but you can have a month to month lease where that will give you an opportunity to, on the later month, find something where it's not so competitive. Yeah, that would be best for you. So most of my clients who are in the lower end pricing, they end up buying, between July and the winter months, because there is not a lot of competition. Because during the initial of the year to June is when it's the most competitive, and they are being priced, like priced out, or um someone else whose parents are helping financially, those are the ones that are getting the house, where they don't have an inspection, they don't have financing, so they don't have contingencies written in the offer. So it's also timing. I'm not saying you cannot start early, you can do that, but just be prepared, and setting expectations is really important. Um, to do so you can, end up buying whenever is the right time for you, basically. But with that, I will pass it back to Rebecca. But if there are any questions, please just send her our way, and I'm here to answer those.
That's wonderful. Thank you, Carlos. I did have some questions. I was
Mhm.
curious. So when you mentioned with the contingencies, so it is a really
Mhm.
competitive market right now, and people may need to waive some of those contingencies, but it is a risk, right, of
Mhm.
what they would to try to get that bid. But going out of those main months, so July through winter can help a lot. And then as a first-time home buyer, you have a slight advantage in that you don't have to sell a previous property, right? To be able to afford that second.
Yes.
So it can give you more flexibility with that timeline and with maybe a
Y-
seller, correct? Or does that offer some?
yes, that's true. Like right now, in a market like this, most people are leaving that contingency out.
Okay.
Like if someone comes to me and say, hey, Carlos, I want to sell and buy a house. Um, they most likely will be selling their house first
Mm-hmm.
and then buying the next house, because if they try, unless they have a financial capacity, to do a bridge loan, or get a line of credit
Mm-hmm.
to do the buy. But I will have that. Yeah, I will have Dustin talk more about that too.
Yeah.
But it's, it will be really hard for somebody to get a house, right? So yeah, you as a first time home buyer, without that contingency is going to help you, but most people will not be writing that
On that.
contingency,
Okay.
um, unless you do it like it's timing. It's all about timing. Like you do it, uh, later in the year. Sometimes you, the seller might take that offer, but it's really competitive.
Yeah.
Most of the time, it's getting better. Like we building, you can see inventory building right now, but within the lower price range, if things are moving quicker, for
Yeah.
sure.
And then
Mhm.
I just had two other questions. Is there any difference between buying a new house, like a new build, versus an old house? Are they just as competitive right now in the market?
So the new homes. So right now I'm representing a couple different people who are buying new homes. Those are twin houses. So it's like a half duplex, right? They're a house, two homes right next to each other. And the entry level on those, where one was 390 and above that. So they're really new construction. There is not a lot in Dane County under the 400 these days. So, but
Mhm.
if you're able to afford something like that, you're better off writing in a new twin house than an existing house where you're competing, because most of the builders, are they have a better way to get you in. And once you, like, for example, I'm gonna throw a name like Tim O'Brien, for example. They, once you see the house and you express interest, they will kind of reserve the house if someone else rides in the house. Not every builder does, right? But some builders, if you write an offer in new construction, you can actually write subject to sell or to inspection. So all those contingencies
Yeah.
will most likely go on the new construction than in an existing home. That, like, the builders are more open to have those contingencies
Yeah.
than a regular seller.
Okay. Okay.
because of the
Mhm.
timeline.
And then the last one was about the letter to seller. So I've heard before that it's sometimes a nice thing to offer to kind of win one of these bids as as a letter to the seller. Do you get a lot of those? Do you notice if that has like a real sway to kind of state your case and how you love the home and you're going to care for the home like they would care for the home, and to help get those more sentimental sellers to choose you even if you can't quite get there financially? Do those
Um, so those letters are kind of going away just
Mm,
because the MLS here is warning people, if you are a person, from the minorities, you write a letter, they put a picture on it.
mm,
Sellers might use that against you too, and is more open to discrimination. So the WRA, the Wisconsin Realtor Association, is trying to eliminate that, and they're telling you, hey, those letters, uh, they don't want you to kind of put that in the offer, right? Like, they don't want to attach it. Sometimes you can send a short paragraph, on the email when you're presenting, to the realtor, and say, can you please share this with the seller?
mhm,
And we try just to not share pictures, just to make sure that my clients are not being discriminated. But it's covering all those. It just to be where everybody was doing it. And that was persuading some sellers to, I'm not saying all sellers might discriminate, but some might, and that's why they're doing it that way. But there are ways like you can present, like in our case, like we try to present offers in a really neutral way because we understand and we're learning how minorities had barriers, up to 1960, 1968, still like, people of color were not able to get loans at that point. So we know we have a learn, and that's why we try to assist our clients in a way where they're gonna have more chances to, and it is, we need to keep that in mind all the time.
Okay.
Mhm.
Well, thank you very much.
Yeah, if there are any other questions, but just feel free to let me know.
Okay,
I can answer those.
wonderful. Okay. Now we are going to move to Dustin Becker from Amerique Mortgage. Dustin has worked with us for a few years as a partner lender for our members. And he's really fantastic, not only with how much time that he's available to members, but also how he's very creative and helpful in getting people that maybe don't have this perfect credit score into a home. He's really great at working with people to get ready for buying home, and we're very lucky to have him. So welcome, Dustin.
Thank you, Rebecca. I appreciate that. And thank you for having me.
Mhm.
So on that topic, we can certainly start off with qualifying. Kyle had mentioned that it's all about what you can afford, affordability. And it's going to be different for everyone. There are certain scenarios where programs will allow for much higher debt to income ratios than what is necessarily affordable. And I'll get into that a little bit further as well. So in the end, it all boils down to what your budget is and what's affordable to you. On the topic of credit, that is one of my favorite things to do is assist with helping put people in positions to be able to buy homes. I do credit management as well. So when I have a borrower that isn't currently able to purchase, I will discuss options such as refinancing with the credit union to lower monthly liabilities on vehicle payments or whatever it might be, consolidating debt to get that debt to income ratio in a position to be able to purchase. And oftentimes to get the credit score in a position to be able to purchase as well, consolidating collections and things along those lines, negotiating with collection companies. There's a lot to all of it. So speaking with people that know the ins and outs, like negotiating with collection companies, a lot of people don't know that you can do that. It's worth talking to people that are knowledgeable to assist with putting you in that position. So we assist Madison Credit Union with quite a few different products. We have availability to assisting with all of the government loan products, so FHA, VA, and USDA. There are subsets within those programs as well. And then we also assist with low down payment options with Fannie Mae and Freddie Mac, so conventional loan products with as little as 3% down. And then there's the down payment assistance piece that can go along with that to assist with the down payment. FHA is a program that allows for higher debt to income ratios. And I apologize that I don't have slides for this, but there's so many different, we call them loan matrix within the lending world. And there's subsets within those matrices. So I really prefer to have the conversation with the borrower and go over what programs are going to be best for you, eligibility. In the end, it's really going to boil down to how our conversation goes, what you have for down payment, where your debt to income ratio lies, where your credit scores are. Each program is going to be a little bit different for each of those scenarios. FHA is actually a great program for folks that have lower credit. We can do sub 580 credit scores with FHA financing. It does get a little bit more complicated. A minimum of 10% down is required for sub 580 FICO scores. And obviously, it gets a little more complicated because assets are generally needed as well. But anybody that's, typically above 640 with FHA financing, 3.5% down is definitely viable. Debt to income ratios allow up to 55%. So Kyle had mentioned that magic number of 35. FHA goes well north of that. Now, that doesn't necessarily mean that it's going to be affordable for you, but they do allow up to 55% DTI. VA is going to be for current and prior military and spouses of deceased prior military. That program is going to allow for 0% down. So great program for current and prior military. The interest rates are super competitive, specifically right now in all government programs, but VA is super attractive. So that's a 0% down program. And then USDA is going to be for rural housing. Probably not going to see that a whole lot in the Madison area just because there's Madison proper, and then all of the communities that are surrounding Madison, for the most part, are going to be outside of what would be eligible for USDA. But smaller cities, anything that has less than 10,000, 8,000, there's actually a map online that you can look up, USDA eligibility map. Anything that's semi-rural or rural will qualify for 0% down as well. Now, the debt to income ratios for USDA are going to be much stricter. It's going to be closer to that 35%, partially because it's a 0% down program and partially just because it's a tighter program. VA will go a little bit higher. We've actually seen up to 60% with VA, but more typically you're going to see up to like that 55 range, like you would with FHA. We offer FHA down payment assistance as well. So with that down payment assistance piece, we as the lender offer the 3.5% down as a second mortgage. So it would increase the total monthly liability or the total monthly payment. But for those that don't have sufficient funds to bring to the table, that down payment assistance program is great. We're able to assist with basically all property types. So single family residence, multi-unit properties, up to 4 units, manufactured homes, single wide and double wide, as long as they're secured by real property, meaning that they're not in a park, condos. So pretty much every type of property that's out there, other than manufactured properties that are in a park. The down payment assistance piece, I'm licensed within Wisconsin and Minnesota and Michigan. So there's a lot of different community grants that are available. And those community grants are typically based on that specific region or that municipality or that county. So in your area, the city of Madison, Home by the American Dream is a great program. It actually is more expansive than a lot of the down payment assistance programs that I work with. They'll allow up to $35,000 for down payment assistance, and it can be used towards closing costs. That is a deferred down payment assistance as well. So it's not necessarily a product where you're having to pay a monthly payment on it. You don't actually have to pay it back until you sell the property. The way they make a small amount of money is they charge a percentage of the appreciation of the property. From what I saw, it was just over 11%. So once you go to sell the house, you're paying back the loan and just that 11% on top of it. We also assist with renovation home loan products. So there are, with limited inventory out there, and I know things are getting to be a little bit better with the competitive nature of the business, but there's still lighter inventory out there. With that being the case, we offer renovation loans across pretty much all product lines. And those renovation products will allow for new kitchens, new bathrooms. We can do loans up to $50,000, $80,000 with those renovation loan products. It really shouldn't affect the the offer piece, because we fund the loan to the seller, and then that renovation piece is a second piece to the equation. And with that renovation piece, I mean, you can go as little as washers, dryers, dishwashers. So all of those components can be financed essentially. So that's why it's always best to talk to your lender about the options, because there are so many different options that are available to you out there. Back to the conventional piece, conventional financing in this market is really the go-to for listing agents and sellers. We do see a lot of the government program offers being accepted. However, with how competitive it is, conventional financing isn't as strict with property types. A lot of listing agents know that FHA will assist with lower credit scores, which can cause for some complications down the road, which is why it's important for me to have the conversation with the buyer's agent. Carlos had mentioned building a team, so that if you are qualified for FHA and you're not able to get into conventional financing, Carlos can then go to the table and say, hey, our lender hasn't pre-approved, has our borrower pre-approved, and there aren't going to be complications throughout the process because it is pre-approved and truly is pre-approved. So that pretty much sums up the pieces that I have. I mean, you can go pretty in depth. The handbooks are like that thick for each loan program. So there's a lot to all of the different loan programs. The number one thing that I say to my clients when they're referred over by my credit union partners or realtor partners is that, they'll ask me the piece, what programs do I qualify for? How much money am I going to need down? It's really going to boil down to how that conversation goes. Getting all of those pieces to the puzzle put together to determine what loan program you're eligible for.
I do have a question here.
Yeah.
And it could kind of maybe a mix of the three, or but so it says, do you have more Madison specific advice, such as how Madison rates are trending, how the Madison market competition is trending? For example, is the time to buy now, or do you think it might get better in the future based on current trends? Based on interest rates, is that going to go up? Property prices going up? How that
So the media is going to spin that in many different directions. So the time to buy is really up to you. If you feel that it's time to buy, you're ready to purchase a home, it's always the right time to buy. Interest rates, we've been hearing interest rates are going to come down for the last 3 years. They'll come down 1/2 of a point, they'll increase 1/2 of a point, 3/4 of a point, come back down, especially with the volatility as of recent with the war in Iran and inflation. I mean, we're seeing numbers fluctuating on a daily basis and oftentimes multiple times per day. As far as affordability or prices of homes, there's articles out there stating that there's an anticipation that home prices are going to go down. The majority of the articles that you read is that, that trend upward of, around 6 to 12% per year is probably going to be more of the norm. So I think home prices have plateaued to an extent. They're not increasing the way that they were over the last couple of years. Inventory is becoming a little bit more available, but as a whole, it is still a seller's market. So when you're ready to purchase, reach out to your lender and to your agent.
Yeah, and the Madison market too always seems to be going up. I don't know if it's with the capital here, the state capital, the university, with Epic, but it does. The market seems, except for the housing crash, every year it just goes up. So waiting to buy, it's just prices are just going to always. I mean,
Yeah, so that's what I was going to add. Some, the local market is, you're going to get those news, the national news, and then you're going to get, the local market is different. Like we kind of isolated. I think, yeah, I agree with Dustin. Prices are now, like, I remember we were writing offers for people where they were like 20, 30, 50, $70,000 more. And nowadays, buyers are also more cautious, and they're like, you know what, I'm not gonna offer that much more now. I just gonna offer up to this amount, and that's it. So they're being more cautious, and I think that's what is the market might settle a little bit on that end. It's just, it depends on the areas too. It's just the location where you're buying, is going to implicate how much more you're going to be paying for that house.
Hmm. Are there any hidden gems here in Madison of this is the neighborhood to get into now because the value is going to go up here, but right now the prices are
Well,
okay.
the city of Madison, in conjunction with, other municipalities, did a study like 2 years ago where they needed to build 4,000 houses, I believe, a year for the next 5 years. And that's they were talking about, condos, apartments,
Mhm.
houses, right? In general. And we're in need of more homes. So it's hard to keep up with the growth that is happening in the area. So being a college town and all these new startups also is not helping, So that's the reason why prices are going up too. That people are moving to um, there is a term that people are using. So people from California, from the East Coast, are moving to this area because we have a lot more natural resources.
Mhm.
So it's so many things that you need to remember, but you will find some homes out there, where, okay, if you have an open mind, you go into looking houses with an open mind, there might be some homes that might require a little bit of work,
Mhm.
and then getting that second loan, a renovation loan, that might help you get into that house um, in the future. So,
Yeah, that's a good point. So picking a home that maybe isn't quite your dream home yet, but it's
mhm.
affordable. And then as Dustin was saying, you could get that renovation loan and even if it is just for appliances to just redo that kitchen. To
So can I also add, there is a land trust in Dane County, I believe, land trust. They have houses that people can get into it. They're selling you the structure. They're not selling the the land,
Mhm.
but that's the way to start in building wealth. You can buy a house, like there have some homes where it's under 200,000.
Yeah,
If you stay in that house for 5 years, you're going to build some wealth, and then that will help you get into the next house. So it's just looking for different areas where you can actually then get you into a house to start building that wealth in the long term.
that's good. That's good.
Mhm.
Okay. Do you have any other questions? Anything else? Any last little insights or tips that we could offer? Um, I know it's a tough market. We bought our house at the height of COVID market, and the COVID boom there, and we paid more than we should have for the house that we're in, but it has still consistently gone up with value. So I mean so Madison market will. So it is it's a tricky. It's buy your house when the moment is right for you. So you can't wait for the market. It's the same thing that they say with kids. Like you can never wait. There's never a great time to have kids. Like you have them when you're as ready as you can be and you go. So getting those finances in order, getting that budget, really understanding all of what is expected to pay when you own a house with that maintenance, with the if you're not getting that 20% down, so that PMI, that private mortgage insurance, right? That you would have to pay for that. And then
What I will, yeah. So what I will say, for those that are in this webinar, I think they are in the right direction already by participating in, seminars like these, right? They're already educating themselves, they finding the information. I will say continue to do that, because that's information is all we need, and information from people, from the right people. So just find your sources, educate yourself, um, reach out if you had any questions on how things work. We are all here to support them.
Yeah, perfect. Thank you.
Mhm.
Yeah. Anything else, Kyle? Anything you wanted to add?
No, I think yeah, Carlos and Dustin hit it perfectly. The time to buy and anything about the market is always for mostly economists and people trading stocks, but ultimately, hopefully it's not as much of a commitment as having a child, but yeah, you got to make the choice for you when it's right for you. And like Carlos said, we're all your team. So anytime you're ready to have conversations, even if you're not ready to buy now, you just want to start the process. I can speak for myself, and I'm sure Carlos and Dustin that we are happy to have those conversations, even if it means prepping for the next several years. We're happy to start that with you now.
Yeah, we don't have to run through a full application. We don't have to pull credit necessarily. Just having that upfront conversation about eligibility and affordability, to see what you can do.
Absolutely.
Wonderful. All right. Well, thank you guys. And everybody there who's listening, thank you. And we're here for you. So this is recorded, so I'll send this out. So if you're registered, you'll get a copy of it. And then I'm going to try to tag along some other just helpful links to Carlos and Dustin, if you have more, and Kyle, but you can always contact directly to Credit Union. If you want to contact them for more specific details, and then maybe like a little breakdown of the webinar. So thank you very much, and have a great day.
Thank you, everyone. Appreciate it having me.
Bye-bye.
Take care.